Good afternoon, everybody. This is Gary's Traders Group and your host, Gary Hubeski. I want to wish everybody a Happy New Year. It is Monday, January the 5th, 2015. I hope everybody had a good holiday and enjoyed their family. I know I did. Went up to the wonderful land of Michigan. It was cold and gray skies and rainy. I remember why I left. Okay, Linsky, I'll remember that. I'll call you Linsky instead of Kirk. So, all right. Let's get through the disclaimer real quick. This webinar is for educational purposes only. I am not giving any kind of trading advice whatsoever. Trading does involve risk. Please do consult whoever you need to before you make a trading decision. Alrighty. So let's go to the macro picture real quick. See what's happening in the market. We had kind of a bloody day today, as they would say. I listened to a lot of opinions out there of what is causing a lot of this stuff. And it's not one particular thing, it's a combination of things. Wrote down my notes here. Decline is due to fears in Europe, Greece concerns, the downturn in oil, possibility of deflation kicking in, which would mean the Feds would have to step in and raise rates. For all of the above reasons, and I know Draghi is going to be front and center as far as Europe goes. And what's going to be happening there. So, but some of the geopolitical things, like let's hope Libya doesn't kick in again. I mean, there's a lot of stuff like that. I think that kind of circulated around and created some fears. The other reason, pretty simply, is we reached a new all-time high. I mean, the market has just absolutely rip-roared here for quite a long time. I mean, I'll minimize these a little bit. So, we went from 15,800 on the Dow all the way to 18,000 in a period of, barely 3 months? That's huge. It's a 3,000 point move. 3,000 points on 18,000 is what? Percentage. 1.6% move, which is, I'm sorry, a 16% move, which is quite large, everybody. So, profit taking is what I'm saying. There were people that were just unloading, and a lot of these big heavy stocks. And of course, if anybody recalls what I had talked about and potentially suggested was going to happen, was three things. One, I said we may have $2 gas by the end of the year. I went to Michigan and got a rental car and spent about a week there. And I, of course, had to fill it up before I returned it. I paid $1.90. And when I saw $1 and change, my head did a little Tourette syndrome twist. Couldn't believe it, but it certainly has. And oil has continued to plummet. I think there's a psychological benchmark someplace around $48. I don't know if we tested that and we got to that today, or where did we get to? 49.77. Gold did go down a little bit, but then rallied. And specifically now there's a downturn in the market. People run to safe haven. The bond market just exploded. TLT was a good ETF to be in. But as you see on the three indices, the Dow, the S&P, and the NASDAQ, we see where the potential support is going to be. I threw in the 23.6 on the Fibs only because that's halfway in between the 49 EMA and the 89 EMA. And I believe there's going to be some support at all of these levels. Now, one of the key things that happened, which is a whole bunch of key things happened actually. One is that we did not close at our low. If you end up at the low of any trading day, it is typically bearish and is not a good sign for the following day. So the last hour was real critical. I was watching it because we tanked down to 350 and it seemed to kind of get stuck there, but then it pulled back and we did not finish on the low. So that's one of the things I think that's something that is indicative of perhaps what's going to happen here over the next week, the rest of the few days. The other is boy, we missed our Santa Claus rally. You know, I thought Santa was going to come to town like it typically has. There's only been 19 out of the last, I don't know how many years since they've been tracking the Dow where Santa Claus didn't come to town. And there's an old saying, I mean, this is the worst Santa Claus rally since 1999. And that tends, historically, to point for a bearish year. But it's too soon, I think, really to say. You know, these are some things in the market that have kind of affected the overall market, and you could jump on a lot of different bandwagons. One thing I know in my 20-plus years of trading is bull markets don't just die. It doesn't happen. The reason a bull market stops being a bull market is because of complete over-evaluation of stocks and their PEs, like what happened in the dot-com craze. You know, you could go out and buy a dot-com stock, an internet stock that had a PE of 60 and had zero revenue and zero earnings. It was euphoria. That's all it was. So, you know, there is none of that I see in the market. I certainly do not see an overvalued Dow. I brought up a chart like that last year where you look at the entire stocks that are in the Dow Jones and its PE, and we were sitting about 17, 17.5. The Dow does not get overvalued until it's about 21 to 22 in a PE. So we're nothing even near close to that. I had said that we're going to have these kind of volatilities coming through the next year. It's going to happen again. We're going to continue going up, and then we're going to have these pullbacks, and then the bears are going to come in, and the doom and gloom Armageddon, that we're going to have our correction down to 3,000, and then the Harry Dents of the world jump on the bandwagon and say it's time to go buy a bomb shelter in Montana. But I don't believe that to be the case. I don't think we're overvalued. And I certainly don't think there's euphoria in the market. As I said, there's a combination of things that created what happened today. Some concerns in Europe, of course, the declining oil like crazy. And, you know, the concern is that the U.S. cannot continue to produce at these levels. It's just not profitable. You know, and you know, the Arabic companies and the oil barons, if you want to call them, you know, they can weather this kind of storm. They're not being profitable. And everybody says they're going to have to cut back in production. There's always been a war. Is this due to lack of supply, or is it due to too much demand? So does everybody hear my audio okay? Am I coming through? I had a sudden red blurb that popped up that asked me to check my audio level. Maybe I was starting to talk too loud. Everything's coming in fine? Okay, thanks, Jerry. Okay, enough of that. I think you guys know, here's some support levels of about 2030 on the S&P, about 4650 on the NASDAQ, about 17,570, 17,570 on the Dow. Let's take a look at what happened in the fear index. It, of course, spiked hard. It plowed through the 50% retracement since its low of the over the last 12 months, but it pulled back. And if you look at the SPYs, you see an opposite inverse relationship to the VIX, but it's just bouncing right off of the hold on one second for me, please. Sorry about that. I need to put my phone number on the do not call list. I'm getting all sorts of automated calls lately. So again, we've got support there at the 89, which is right around the 201.50 level on the SPYs. So, will this continue? Well, it's not just going to bounce and turn around. I think we're going to have some continuation of this sell-off, at least for a while. I'm looking for a rally towards the latter part of this week. All right, let's go to the micro picture. What's happening in the economic news? Things to look out for is Wednesday. And are the Feds going to step in and say, boy, we smell some deflation coming in, and so we're going to raise rates? I mean, there's some fear about that right now. So it's a pretty big day that'll affect the market. And we have jobless claims coming up on Thursday. And the first Friday of every month is always our economic employment situation, which is a false figure, everybody. Because if you've been unemployed for a year, or if you're self-employed, they take you off the list. I mean, how many people out there just gave up after looking for a year for employment and just couldn't find a job in their vocation and skill set and didn't have the money to go back to school? So, that's not always 100% accurate, but the market reacts, so we have to be cautious of that. So be aware of these government news events that do take place and affect the market this week. One of the things I did is I looked through a lot of different stocks. I created some more lists, looked through potential trades for this week. And one of the things that came to mind, did anybody see what happened to Gilead today? Gilead Science? They got approval for their hepatitis C drug, or at least an endorsement by CVS, that CVS is going to market it. Folks, that thing is $1,000 per pill or something crazy like that. It's stupid expensive. But their stock did quite well today. GILD, you can see it took a nice little pop-up today. And I think it's going to continue the run. So along that, without jumping right into that, but that happens to be in the pharmaceutical biotechnology sector. And that's one of the things I did is I looked at, all right, what typically moves this time of the year? You guys, everybody should have this, the ETF spider list, because this is a real easy way to take an overall snapshot of the different sectors in the market and what sector moves when. Seasonality, even they were talking about it on CNBC today, that, seasonality definitely has a place. It's not the end-all, be-all, but it definitely has a very significant place. That, along with technical analysis and, of course, fundamental, will create, a good trading atmosphere. So looking at the spiders that have all the different sectors, one that comes up, the first one is biotech. It just happens to be the first one. You can see here in the beginning of January where it pulls up. I think I have this set, I have it for best rating pull zone. So if I highlight this area, I have an 8 out of 8 that this thing takes off, that biotech takes off. So logically, what I would do from there is go to FinViz, because FinViz will allow me to screen stocks within a sector. Now, as you know, FinViz will not let you export anymore. If you do, it takes you to their, they finally got smart after so many years of being free. Now they want you to subscribe at $40 a month or $300 a year. Smart company. They build up a super loyal base, and a lot of people say, you know what, I'll drop $300 to have the fantastic screening ability, and everybody says they're the best. They're better than Zacks, in my opinion. They're easier, I should say better, but they're easier to be able to understand. So, but you still can go to the screener and still look at an industry, for example, biotechnology. There's 289 companies, but we want to, of course, eliminate the companies that don't have good volume. We need volume for liquidity. And we want a decent stock price of over 30 bucks at least, because this market, most of the good companies, their price of their stock has gone through the roof, which really boils it down to 28. Now, I can further sort these or eliminate these by their performance. What did they do year to date? Who's the best player? You know, if we know that the industry historically takes off, well, we want to know who is the best players in that industry. So all you have to do is click performance year to date. That gives you the lowest performing, Juno. And then here's the highest. Now this isn't in Best Choices database, neither is this, neither is this. VRTX is, but they don't seem to have a very good seasonal. MDVN is an interesting stock. That was the first one I came across. And boy, I certainly liked the way I saw the composite on the seasonal. So I went to best profit per trade and said, I wonder what it does from about this beginning of January right up into the middle of February, and highlighted that. And sure enough, that thing had 8 out of 9 years where it rock and rolled. So then I would say, well, where is it at currently? Well, it's right here currently. Where is that? You know, and this is starting from around January 1st. Okay, so obviously, or January 2nd, beginning of January. So where is it at right now? Well, looks like Best Choice is going to freeze up on me. Hold on a second, everybody. We all know this occasionally happens. It seems to have stagnated and it's consolidating. You almost see a flag forming. So then I would go to my charts to further explore in more detail from a technical aspect. Oh, I'm looking at shorting Amazon too, by the way. And I noticed it's just got some real support right here. It ran from $69 all the way up to $117, pulled back, and it's having support at this particular level. Now, I added in another subgraph. I decided to start using this year to be able to increase my timing a little bit, because I use this for my day trading the futures, the S&P 500 E-mini, and I've really learned to recognize these signals, and these arrows are automatically formed. This was designed by the late, great David Elliott. It's basically a stochastics that's tweaked that was originally designed for finding shorts. The yellow arrow is a template arrow. You don't count on it, but the red, when it lines up, you can see that when I put my crosshair right there. That's a great signal. That is a very good confirmation to short. The opposite is the green, and it's usually an early indicator. For example, you can see there's a red arrow and it's overbought above the 80% line, and that, if you look at it, is on that huge down candle on that particular day. So I've got a whole moving average that's turned. I've got a pre-signal on this, and I almost have a DPO that wants to pull up, but geez, oh Pete's, the market went down 331 points today, so it's dragging down 95% of all stocks. So it's a stock to keep an eye on. The reason I say that, folks, is because I do not like the pricing of the options. It's crazy stuff. And really, I would want to get something in February. simply because of the way I see things from a seasonal perspective. Because really, if you look at it and you really do what people that really don't even screw with this part of the software, you just highlighted that it's really highlighting the end, not so much in January. Doesn't mean that, on a day like today, that there isn't a lot of great bargains out there where you can buy some cheap calls. Yeah, you're not going to be the hero necessarily this week, and you may have to weather a little bit of sideways or down movement, but really, it's who crosses the finish line who's going to be remembered, right? So I listed it in my Excel sheet I'm going to send everybody, but I did not put option pricing because I don't see anything. I'm going to wait for things to load up a little bit more. I wouldn't necessarily do January. And the other thing I don't like is the spreads between the bid and the asks. I mean, when you got this huge amount of spread here sitting at the 105. Now, the 105, if I throw in and see what, for more of an analysis, you'd want to always add the probability cones because that will show you a good snapshot of where, with one standard deviation, the probability of the stock closing at. And so you see it's about $109 for January and about $118, which is really almost at where the high was. And again, we've got a nice progression up. The 49 EMA is above the 89. So there's a lot of positive signs about this thing, and it's oversold with linear regression screaming upwards. And also, it's part of that biotech sector as the 5th best producing stock year to date. And we also know that from a seasonality standpoint, that biotech goes up. And that's the logic of my progression and how my progression of thought and how I use best choice and technical analysis. Now, one of the things you can also start doing is well, they don't have it on all stocks, but there's another part of TOS that has fundamental that you can click on. Like if I did Apple, you can see company profile, and you have this Trefis estimate, which is pretty interesting. And it's based on a whole system of evaluation, from a fundamental standpoint, which is important, folks. I mean, you got to combine this with technical, with seasonality. That's the way you become a good trader, and you also have to always weigh risk reward. So I've listed MDVN, but I've not listed a strike price or an option price. Okay, moving on. I said, well, what else is on here? Celgene, great company, fantastic company, but didn't really like seasonality on it. So I started to do some more legwork and research from a fundamental standpoint, and it actually looked pretty good, but it's got some earnings coming out towards the end of the month. Various years, like 13, well, I wouldn't have wanted to have been on the long side of that. 12 was a beautiful year for the first part of January to be long. Same thing with 11. 10 was horrible, so I'm starting to sense a mixed bag here. 09 was good. 08 was bad. 07 was good. So, long and short of it, I decided not to look at it. Next, Alexion. I looked at it, didn't like it. BIBB. I looked at that and I said, yeah, I kind of like that one. Biogen. Now, I look at stocks with an 80% historical probability if I have at least, normally I like to have about 7 to 8 years. This has 11 years. So with 11 years worth of history, 81% probability is something to look at. So then let's go look at the charts. Type in BIB, and why do we have such a, I don't know why this, oh, because it's not populating the probability cone. You got to watch that with TOS because it'll mess you up. Well, I do have the 49 above the 89. It's a key indicator I look at. There's a lot of consolidation in this area. This is on a 6-month basis. Don't really have any trigger on the stochastics or the DPO. It's all kind of really pointing negative. But again, today was not a day to make a decision on buying, unless you were really gutsy and you were willing to buy a bunch of time to go long and you were very bullish in the market, which I still am, but in the long run. So let's look at what the probability cone would look like. Okay, so we have 361 on a January, 387 on a February. Looking for a short move, folks. All of these are going to be short-term trades. Get in, get out next couple of weeks. And, by midweek, unless something happens with the FOMC meeting and that sends the market reeling even further down, well, then I'm going to be very cautious on making any long trades. And I'll just stick to my day trading and wait for the market to get more directional. The trend is your friend. So let's look at January. And January, based on mathematics, I liked the 350s. With 2020 open interest contracts, 172 bought or sold today. IV is very, very low. Well, relative to its historical, it's about the same, especially when you look at spot month versus 1 month out at 350. It's 39.56, 43. It's not much difference. Expensive, folks. $5.70. $5.90 is what I put. I guess it's pulled back a little bit more. It was down $5 today. But for all intents and purposes, based on the historical move that I expect of 4.94, puts me at a target price of $354.36. 354 puts me right underneath what expected in one standard deviation, and it's underneath the top of linear regression based on a 90% width. So that's, if you got the cash, $5.90. Now, another way to trade this would be a bull call spread. I used to love to trade these expensive stocks. I generally traded the weeklies. It doesn't mean that you can't trade a monthly vertical, as they call it here, and a lot of people call it. Some people call it bull call spreads or bear call spreads or bull put spreads or bear put spreads, all interchangeable names. But the generic is vertical, but they're easy to do. It limits your risk. It does limit your profit at the same time, but it allows you to spend less cash. So you could get into, for example, right at the money of 337.50 and then go out with a $5 spread and sell that 342.50. And now you're into that. You're into the 337.50s. Instead of spending $10.60, you're spending $2.25. There's only $5 total, but that's still more than 100% return after commission that I could make by spending $2.25. Oh, this has got 10 contracts. It should be 1. But either way, it doesn't matter. It means the cost of the trade would be, it says here were 10 contracts, $2,250. My max loss is $2,250, but my profit is more than what I spent. So you could spend $225 with a potential profit of $2,000 or $275. So it's a good deal. So I put that on there as well. Next, talked about MDVN, talked about Celgene, talked about Alexion, BIB. There's Gilead Science. And of course, it just got that green thumbs up from CVS. What was my note? Yeah, preferred treatment for the hepatitis C for CVS Gilead Science today. So I said, well, what does Gilead Science do anyways? Normally, historically, it's part of the biotech. So let's look at GILD. Well, sure enough, I like that composite. I see nothing here in blue lines, which is good. Highlight this area, and sure enough, I got an 80+% winner. Cool. With an average move of 4.49. If you take that average move and apply it to the closing price to give you a target, GILD, that would put you right at the 100. Well, actually, the target price is $100.77 based on their close, moving 4.49% potentially. It's pretty inexpensive, $1.59 for a $96 stock. I like that. And 6,900 contracts probably bought today with 30,000 held overnight. I like that. Let's look at the technical. I got a trigger here with a PPS, a John Person. Of course, I've already had a Hull turn way over. So any stock that can be positive in such a negative day has tremendous strength. So we're looking at 104 as potential one standard deviation close on the stock price of 104. Historical average move puts me at $100.77, 81% probability, and I put $1.72, but it's only $1.59. So I think that's a good one too. Next one is, I think I had on this, is Illumina. This is one of my dirty dozen, actually dirty 11. Illumina is one of these. I think it's the last one. No, it's not on there. I'm sorry. It's Intuitive Surgical. Anyways, Illumina I like. ILMN. Seasonal perspective, ILMN. It's again nice composite pull-up. That's actually since the middle of December. I don't want to take it from there, so I'm going to use best profit and try to see if there's a trade within this January area. And sure enough, there's 11 out of 13 years, 84.62% probability, with an average move of 14.78%. If you take that 14.78, apply it towards the stock price of $190.72, it puts you at a target price of $217.46. Well, $217 from $190, that's $27 in 3 weeks. I'm not going to stretch that much if I'm looking at January. I'm going to do closer to the money. So then I start looking at pricing. And I'm looking at open interest. I'm looking where's the volume, and I like the 200s. And I think you picked that up for about well, it's at 420, but that's giving you the NAT. I would shoot for the mid and see if I could get filled at the 370. That's what I put down as the mid. That's still kind of pricey, right? So another approach to this would again be a bull call spread, but you could do it at the money. You know, you want to always have a little bit of intrinsic value when you do a bull call. So if I'm buying the 190s, I have 72 cents of intrinsic value already, and it's a very positive stock moving upwards. So I'm going to buy the 190, and I'm going to go $5 out, and I'm going to sell the 195s. Now I'm in for 250. Okay, it was a little bit less when I looked at it. 190, 195. Geez, gosh. I had $1.60, but man, this thing just took off. So this is obviously more expensive. You know, you could reduce cost, and you'd have to go a little bit further out of the money, which I generally don't like to do. But that's of course because I've traded weeklies. But now you're in it for $240 for going out to the 190, 250, 197 is not worth it. I'd still do the 190, 195s, but it's a little bit more expensive at $2.50. So I had to make that correction. Alrighty, what else did I see? I saw didn't look at Amgen, AMGN. Let's take a look at Amgen. We've traded it all before. Oh, well, yeah, those aren't good odds for me. I don't like that. It is way beat up. So from a technical perspective, it could go up. Now I got a nice progression here and a nice roll. I just tipped off the bottom of the 89, if you can see that. I actually ended up on an up. It was not a negative candle. So 167.05. $167s. I go I'd do 165s for $1.16. Probably could pick it up for $1.05, $1.07. Boy, that's cheap. That's 0.8%. And it is a biotech company, and it is in the top 20 of all performance out of 289 companies, with the biotech sector historically going up. So I didn't list it. If you guys want to write it down and take a look at it, it's up to you. All right. Another seasonal trade. This is just from looking at stuff. Is BITA, B-I-T-A. Seasonal perspective. It is it's 100%er into February. Well, it was 100%er into February. There it is. 18% move. So you'd have to look at a February expiration. So let's take a look at that and see what that looks like. Well, geez, oh Pete's, not a lot of open interest, right? See that, everybody? For February. Pretty high IV on that, too. No, that's normal IV. Expect a big move, but that's what does it look like from a technical perspective? Well, I got a positive DPO. I still have the 49 above the 89. I do have a breakout actually today. Stock actually closed 51 cents high again. This is a strong company to be able to close higher on a down day. So January puts me at 83.62. So if I felt bullish about this, there's a strategy I could do to get into this stock cheap. I'm going to see what it looks like. $83.62. I mean, I could wait till more options open up. I'm certainly not going to pay $4.90, and I'm not going to stretch to the 85s. There's just not enough history for me to do that, right? And this thing is kind of in the middle here. That's okay. It doesn't mean it won't go up, but you know, it has gone up every year except 2012. Well, 2012 it did as well. $2011, well, it didn't do it till the end of the month. Bottom line, not a lot of history with this, folks, so I'd probably want to err a little bit cautiously. But if I wanted to maximize my potential profit on this, let me see what this looks like. how did I do this for 30 cents? There it is. I'm into the 70s, right? I'm sorry, I'm selling the 70s to offset the cost for me to get into at the money at 75. See that? I sell one contract here because this is a bullish trade. I'm expecting the stock to go up. On all of these, be it verticals or calendars or iron condors or straddles or strangles or any of these options out there, folks, remember one thing. You still got to be right on direction. You still got to know which way that stock is going to move, okay? So a back ratio gets you into that for cheap, only 30 cents. And that gets me into the at the money at 75. And I'm actually buying twice as many. I mean, if I changed this setup to orders, order defaults, options, default quantity 1. Okay, so let's do this again. Buy a back ratio. All right, so I'm buying, for 30 cents, I'm able to buy 2 contracts at 75, which would normally cost me $370 per contract, right, or $740. So instead of spending $740, I'm bullish on this trade, expecting it to go up. It's only going to cost me $30. Actually, $60 because I'm buying 2. Okay, so maximum loss is only 530, max infinite profit. It's just another strategy I wanted to show you guys, okay? The other would be a bull call spread in the 75, 80s. Well, I could just do this, buy a vertical for $1.95, which is real good. With a $5 spread, that's real good. Because you spend $195, you can make $305. So that's BITA. A couple more I'm going to talk about here that I liked. I want to finish up with the one other sector that I liked is the healthcare sector. "16 years, it's gone up every year? Wow. But it started around the 20th. Well, has it gone up since the 20th? Oh, it's going to freeze again when I do that. Gosh darn it. That's okay. I'll just open it back up again real quick. XLV. And where's the 20th? You can see the date here. Well, that's the 20th. That's the 19th. That's the 20th. It certainly hasn't gone up. It's gone down. But its progression is up. Right? Have a probability, 75% probability it may go down tomorrow. So let's look at, another setup you guys should use for charts is on the flex grid. If you want to see a macro picture. We are looking at XLV. This is a 1-year weekly, 6-month daily, 20-day hourly. Okay, we definitely see some nice support at the 49. Looks like a doji on a weekly. We do have a hull that's turned over, but this is significantly pulled back after its high. No, not significantly. It is pulled back. So this could be an indication that, and and I did some research, there's a couple of sectors to look at right now. That's industrial, technology, biotech, and healthcare, because they all also have international exposure, which is good, because they're going to be able to pull, they're not going to be tugged down by one particular industry or country. So XLV, I think, is a potential trade. I like this chart just the way it looks. Don't like the DPO pulling down below the midline. So I would like to see some positive movement, maybe a breakout here in the next day or two. We'll see what happens. But I think it's a potential trade. And after I did the math from the historical, I think I tried to look at just this area in here. There it is, 87.5%, starting at the end of December into the middle. And again, I'm looking for a short-term move on all of this stuff, folks, because there's other moves I'm going to look at towards the end of the month to go long, a lot of other ones. There's Netflix, there's Priceline, those are the two biggies in earnings. So XLV, I looked at the 70s based on this average 2.82% move. And that's for 29 cents. It's cheap, 10,786 open interest contracts. And that puts me right at potential target of 1 standard deviation for it to close at. This is not a technical. I'm sorry, this is not a seasonal. This is a technical. The next one I'm going to show you, that is. I just think this is the company of the future, and it's just going to dominate like crazy. That's Alibaba. So it's gone from a low of 82 to a high of 120 after its IPO. So let's do a fib retracement on this and see where this thing, oh, you know what? I may have already got this. Yeah, I already did it. I did retracements as well as extensions so you guys can see. It seems to be bouncing a little bit off the 50%, the 101.41. Well, it's a little bit below that. So it may stretch even further down to 97.02. Around that area, if I see some positive movement upwards, I'm going to look to go long on this. This is one strong, crazy company. Crazy strong, as they call it. And what I was looking at is the 105s for $1.08, 24,000 open interest contracts, and 4,300 bought, more than likely today. You could buy some time and go out to the 115s to play it safe, which puts you at the 50% extension. I put down January's 105s, quick profit, in and out. Alrighty, let's take a look at a short. Anybody short the market here? WSM, Williams-Sonoma, 90% probability for it to tank. 6.1% average move to the downside. If you take that and apply it towards its closing stock price, and what a nice looking chart to short at stock, folks, right? See that beautiful double top right there? Boom, this thing's going to crash. You got a historical 90% probability it does. It's just a perfect setup. You can see where it's sitting right now, and its lowest it's ever been to the highest it's ever been. Seasonally it pulls down. From a technical aspect, it's pulling back. Let's see what those options cost us. I'd buy the 72.5s for 80 cents with 4,600 open interest and 29 delta on that. I like that one. Where did I put? I put January put. Oh, this didn't formulate the 2 percentage points. 72.5 is what I wanted as the strike. Okay, so that's a short, Williams-Sonoma. I like that. There are 2 earning plays this week if anybody's interested. One is Micron Technologies, coming out Thursday. Aftermarket, MU. They have a strong historical move of 8 out of 9 years. And if you look at a little bit more of their technical, for example, let's go to Earnings Whisper. Look what the analysts think of MU and see what they're thinking. Well, I got 15 say strong buy, target price of 43. And these guys are supposed to be smarter than me. So let's look at MU. What did I put for MU? January 37s for 53 cents. January 37s for 53. Gosh, it's now down to 34. 48,194, 6,154 bought. I will tell you, a lot of people loaded up here, though, at the 35s. And maybe when I looked at it, which was way early in the day, let's see what the probability is. $36.66, and I put 37. So you know what? I'm going to change the 37 to 35, and the price of 90 cents, which is still, that's less than 3%, but I like that better with a 39 delta. Target of 38.74. So, well, see, that's the reason I think I chose the 37s and I stretched that far. Based on an 11.51% move, 33.75 times 1.1151 puts you at $37.63. So that's why I stretched. But my delta is 19. So you know what? The difference between 34 and 90 from a cash perspective, even though that's 1%, but that's 37. And because of where this is at, and now that I'm looking at probability cone of 36.67, of course, if it pulls up a little bit tomorrow, the day after, this will pull up as well. But to be more conservative, I choose the 35s, and that's what I've changed it to. Last one, which normally reports good earnings, is the company that owns the online university, Phoenix, Apollo Group. And they normally report pretty good earnings this time of the year. So err with caution on this, folks, because there are some tailwinds that are coming for ESI, DeVry, as well as Apollo, you know, ITT Technical, DeVry Electronics, and the Phoenix of the Apollo Group. I think tuition is going to be going up, which means less people are going to be enrolling, and there's regulation and lawsuits and the stings that they've done, which is still not all been 100% settled. There's still very loose regulation out there. The government has not really taken a firm hand and strong on this. However, putting all that aside, I did list it as a long. You guys can do what you want on this. I chose the January 34s for $1.34. Well, that's even cheaper now. So I'm going to put 134. 89, almost a 90% probability from a historical perspective. And a lot of contracts loading up, 16,362. Now, I don't see that much short interest. I mean, if there was a disparity of short interest as well, you know, in the 5, 6, 7, 8,000 range, then, but I got 15,000 open interest here, the 31, 16,000 open interest to 34s. Based on more of a technical and seasonal, I chose the 34s. So with that, I talked about Williams-Sonoma, Baba, Bida, MDN, Gilead, Illumina, Biogen, the ETF, and Apollo. and Micron. All right, opening up the floor to anybody for me to look at some stocks. Let's see what some people say. Okay, Jose talks about Nike. Let's take about Nike shorting it. Well, boy, look at that, folks. This is the reason I like to have a traders group. People find things I don't. 80% probability of shorting. It's sitting way up at the top of its historical price movement. I think I already did some retracements on this once before. Oh, actually, these are probably all no good anymore, so let me remove all drawings. This is from a long time ago. Yeah, boy, look at that on a weekly. It just did. Here's your person's pivot study. You've got a whole move down. You've got a breakthrough. You've got a downturn DPO on a weekly. The same on a daily. And, of course, on the 20-day, today it just tanked hard. I think there's going to be some support right around that 92, that low area. But let's see what it looks like. Remember, Nike's a strong company. It's also globally connected. But from a historical perspective, $90.02, $3. Well, let's do the best rating to get the best. 3.53. $96.47. Stock closed at $93.50. Puts me at a target of $90.19. Stock is at 93. I'd err to the conservative because I got a stronger delta, and I would pay, and that's 1%. So that's a good-looking short. Thank you, Jose. I'm going to list that for the rest of the group. I'm going to put that in real quick so I know. Nike put January strike of 92.5. And price is 90 cents, 0.9. Historical probability, we had 80%, which is something to look at. And a target price, we said, of what? $90.19, $90.19. 90.19. Okay, thank you, Jose. I appreciate that. Let's see. Linsky says BBBY earnings this week. Take a look, please. I think I did, and I didn't really like it from a seasonal historical perspective. Bed Bath & Beyond. Other than perhaps shorting, but again, I have mixed. Whenever I see Linsky where there's blue lines above and below the composite, and there isn't more of a definitive direction, I can almost say that's a 50-50 probability. And earnings sometimes can be anyways because they got to hit on all three cylinders. Please remember that. Not only do they have to beat the analyst's EPS, estimated per share, estimates, they also have to have great sales and beat that. And the kicker is their conference call, and are they going to do well in their forward guidance? I've seen so many times that companies have beat their earnings projections, but then don't do well in forward guidance, and everybody sells off on them. So not a real strong from a seasonal perspective. Are there any stocks directly with the oil prices, somebody asked. Yes, absolutely. I mean, there is the oil companies. I mean, these are just directly the oil companies. Exxon, Occidental, Marathon, EOG Resources, ConocoPhillips, and these are all Apache. These are all strictly in oil. I mean, there's other, you know, other companies that are affiliated in that sector, and that would be these 11 here. If you'd like, I could include those on the spreadsheet, and that way you can, of course, then just take a look at that. I think I also listed when I said short oil, XOP and XLE. I said that on December 15th. Look back in your Excel sheet. It says I'm looking at shorting oil and related ETFs, XOP and XLE, which have done really, really well. I mean, in lieu of seeing where the market went, I did this last time, so I better do it this way. There we go. Yeah, I mean, here's December 15th. Actually, no, it's gone up and come back down. So I would say this is a good time to get into XLE or XOP. There's another one. And of course, it's doing nothing but tanking here for the last 3 months. But I will attach the various different companies that are attached or that are the players in the oil industry. Okay? Alrighty, are there any other stocks you guys would like me to look at? Keep in mind, wait for things to start bouncing around if you're going to go long. Buy yourself some time if you have to. Always look at the various different parts of a trade and weigh risk-reward. Always remember, weigh risk-reward. Okay, with that, folks, I wish you guys all good trading. And until next time, we will talk to you guys soon.